Nvidia Corporation, ticker NVDA, their stock is trading up more than 7% in Thursday's pre-market session as investors react to the company's quarterly results and upbeat commentary on AI demand. The move follows a double beat and management's message that the AI infrastructure build-out is at full steam. The big tech giant reported second quarter revenue of $96.22 billion. That was versus a $92.18 billion expected, and adjusted EPS of $2.22 versus a $2.10 expectation. They had gross margin at 75%, and CEO Jensen Huang said, quote, "Demand is accelerating," end quote, and he pointed to Vera Rubin ramping into full production with partners. NVIDIA also guided third quarter revenue to a range of $105.84 billion to $110.16 billion. And it said that it ended the quarter with $99 billion remaining under its share repurchase authorization. Jensen, by the way, also went on to say that because of his belief in AI and how much better this is all going to get, he actually views this as an attractive purchase for NVIDIA. So, I mean, we'll see if what he says actually pans out, but it sure seems like he's keen on buying the stock back at these levels. The company remains central to the AI investment story, but experts differ on how much upside investors should expect as growth expectations rise, competition expands, and markets demand clear returns from the massive AI spend that we see quarter to quarter. More Insights and Strategy CEO Chief Analyst Patrick Moorhead told CNBC that NVIDIA still serves as the bellwether for AI because far more software companies use its GPUs than competing platforms. Dan Ives also reiterated that Jensen is the godfather of AI. He noted that NVIDIA delivered a four-way beat and 126% revenue growth, but the company failed to reach some buy-side whisper expectations. Investors have also become accustomed to unusually large beats, making strong results less likely to generate the same stock reaction as before. Moorhead expects large hyperscalers and major AI model developers to create their own chips, but he believes rapidly expanding AI demand makes it difficult for rivals to take enough share to materially disrupt NVIDIA in the near term. He also highlighted NVIDIA's ability to secure high bandwidth memory ahead of competitors, while pointing to robotics and industrial Internet of Things as longer-term AI growth opportunities. Freedom Capital Markets head of technology research Paul Meeks, friend of Benzinga, told CNBC that he remains very bullish on NVIDIA and the broader AI ecosystem. He does not expect a meaningful slowdown until 2028 or later. Meeks said NVIDIA results and guidance continue to counter concerns that massive GPU and AI infrastructure investments will fail to generate adequate returns. He also highlighted NVIDIA's valuation, saying that the stock trades at roughly 16 to 17 times earnings, below the broader S&P 500 multiple and about half of AMD's multiple. Meeks believes stronger evidence that companies can monetize AI investments could unlock even more upside. He also sees lower counterparty risk in NVIDIA's financing arrangements because financially strong hyperscalers have driven roughly 90% of AI infrastructure spending to date. Bespoke Investment Group co-founder Paul Hickey takes a more measured view of NVIDIA's stock prospects. Hickey told CNBC that NVIDIA's enormous size ensures it will remain important to the broader market, but heavier investor attention makes it increasingly difficult for the company to deliver surprises capable of driving outsized share price gains. Not to mention, it's gigantic in the trillions in market cap. He also noted that NVIDIA showed essentially zero correlation with the SOXX semiconductor ETF over the previous 3 months, even as the stock continued to outperform weaker semiconductor shares. Hickey believes NVIDIA's period of hypergrowth in its stock price is likely behind it, but still he considers the broader market an AI bull market and says AI stocks eventually need to regain leadership for that bull market to continue.